What are your thoughts on Investec's trading update today? Of course, the stock slipped back slightly, the banking sector under pressure today. Kind of mixed emotions, I suppose. Australia turning around, but the UK is still a problem.
It's still a very difficult industry for investment banks, and I've been going on and on about this, is that nothing's really changed. It's still going to be very, very flat. So, Investec's working in a very difficult environment at the moment. It's not going to change anytime soon, at least we don't think so. So it's certainly a stock that we wouldn't be looking at accumulating or getting into at the moment. So it's still a stay away situation from my perspective. I know the stock price has been very volatile. It's recovered from extraordinary lows and it's gone up quite nicely. We've seen a bit of weakness. It's not enough for me to actually get involved in right now.
Staying with the financial sector, we had results from RMI. So this is a new beast on the market. So fantastic elements to which it's exposed. Discovery, MMI, OUTsurance being a particularly strong performer for it over this period.
It's a holding company for those three businesses. I mean, you can buy MMI on the market, you can buy Discovery on the market, but you can't buy OUTsurance on the market. I think their holding is about 88% of OUTsurance. So you're getting quite a decent selection. It's completely different from Investec. So, it's a completely different beast whatsoever. So I'm not saying, shun all financial stocks at the moment, just Investec currently. RMI is lovely, actually. You've done very well if you've invested in there. It's got a nice set of results that came out of all three of those businesses, specifically OUTsurance. And OUTsurance and MMI both declared special dividend, which meant that RMI could declare a special dividend. And there's one thing that investors love is a special dividend. So we've definitely seen that share price shoot above 20 Rand, I think, today, mainly on the back of that special dividend coming up. People are chasing yield at the moment. Do you get involved right now? It's a fair question.
Do you get involved in insurance companies at all? Because they tend to trap the markets.
Absolutely. Look, I think they have a place. I think the one thing we need to understand is that, if the consumer starts coming under pressure, which some people indicating will happen now in 2013 onwards, the bonanza's over, it's certainly going to affect them. I mean, people won't pay as high premiums as they used to. They will downgrade on insurance and so on. That will certainly affect OUTsurance. It'll certainly affect Discovery. You would hope investment would still remain, okay and grow. That won't really affect MMI so much. So, you could have a bit of a pullback off very high levels. But, when it comes to defensive qualities, it certainly has its place. People need insurance regardless, and they tend to insure their goods and so on. So I would say if you've got it in your portfolio, keep it. It's been a very good money spin. It pays a good dividend. But to buy brand new from scratch, I would wait a little bit. I'd sit on my hands currently.
What are you buying at the moment, Nicholas?
Well, today not very much, because the big news is, of course, Ben Bernanke chatting at around about 8 o'clock.
So sitting on your hands, treading water, as everyone always says.
Basically, you want to find out what's going to happen. I mean, the markets are pricing in a QE3, and this whole quantitative easing that we're talking about, this massive stimulus package. I mean, $500 billion is the figure that's quoted. That's huge. If that doesn't go through, the markets are going to really, really take a dive, and you don't want to put new money in the market just before this amazing announcement. So I'd rather sit back and wait and see, because as a South African, the markets are going to be closed. I'm only going to find out tonight, and you might get a nasty surprise on Friday morning. I'd rather come to work on Friday and be prepared to react to it with fresh money, or at least a fresh pair of eyes. So that's what I've been noticing today.
Nick, we're seeing pretty bombed out valuations in the mining sector, and I think it might continue for some time. But much of it hinges on QE3, or whether China does indeed stimulate further. What's your feeling? We asked you about financials. Would you be comfortable buying mining, or do you need more evidence that there is indeed a turnaround?
Well, you see, the thing with QE3, it's a sentiment-related issue. If we've got QE3, it means that the world needs more stimulus, which isn't a positive thing, but it means that so much capital is being injected to the market that the money has to float somewhere. So it's going to float first into areas that are depressed or undervalued, the mining sector. The reason why the mining sector is depressed or undervalued is that there's a great concern about world growth, hence QE3. So world growth is coming under pressure, specifically from countries like China that consume a lot of raw materials. You're going to have a downward pressure on these resource shares. However, every share has its price, including platinum shares. At the moment, you wouldn't believe it, but yes, they do. So I think it will be very important to concentrate at the moment on seeing if there's going to be a QE3 tonight. If so, mining stocks are going to shoot through the roof, and I would rather get in on Monday on some of the stocks that have been depressed. All that said, I will still steer clear of gold stocks. I would still steer clear of platinum stocks, purely because at the moment, the current situation, as we all know, with regards to the strike action and the potential contagion of further strike action into other sectors in the mining industry is vast. So I would be a little bit cautious there. But companies like Kumba, Exoro, Billiton, Sasol,
just kind of talking
would be pretty good to look at.
Sorry,
no, it's all right.
But what about the whole issue of dividends? dividends going forwd? Because if you have all these calls for higher wages and everything and all these cost pressures in the mining sector, I mean, surely
in general,
companies with operations here are going to be able to pay less dividends out.
What's interesting is historically miners don't pay a good dividend. They have to continuously reinvest in order to build new mines and so on. It's just in some cases like Kumba, for example, where the mining costs are so low and the price of the commodity is relatively high that you have these super profits and super dividend being declared. But in general, miners don't really pay a big dividend in any case. So you're not buying a miner right now for dividend, unless it's Kumba, I guess, or Exxaro, which just happen to pay a very good dividend, hence buying them still. But if you look at a Billiton or an Anglers, you're looking at 2.5% dividend yields, which aren't that high at all. So I don't think dividend is a major concern right now from that perspective.
Nick, thanks very much.
Pleasure.
That was Nicholas Sorour. He's a portfolio manager at Sasfin in Pretoria.